Well, President Trump says he is terminating trade talks with Canada on the heels of new anti-tariff ads from the Ontario government that features the voice of former U.S. President Ronald Reagan. Let's get perspective on that and the latest print on the U.S. economy, the long-awaited CPI report. Joining me now is John Zechner, chairman and founder of Zechner Associates. John, thanks as always for joining us.
Hey, Roger. Good morning.
What are your thoughts? Let's start with Trump. What are your thoughts on it? What kind of an impact is this going to have up here?
Well, I don't know if immediately it'll have a huge impact necessarily, Roger, but I mean, it's just sort of more of the same. I mean, they call him mercurial and sort of what he does, but clearly Donald Trump is driven more by, personal engagement. And, he's looking for a lot of world leaders and heads of companies as well to sort of, kiss the ring or bend the knee or whatever. And he's gotten it from a lot of these guys. And, we never brought him a golden iPhone or anything like that. And certainly, Mark Carney is trying to do a better job than Justin Trudeau did at that. But in the end, Doug Ford is sort of standing up for Canadians a little bit, and just he's U.S. is going after us in a pretty aggressive way. I mean, Canada is in the crosshairs of this, and I mean, Canada, has always been a branch plant to the U.S. in some ways, and means we're the easiest target of these tariffs. And you start taking 500 jobs out of Ingersoll or Alliston or, Windsor or Oshawa or, what you're doing to Goldman, the Sioux, and it's going to hurt us dramatically. So Doug Ford is fighting back a bit. He hit him where it hurts. I mean, Ronald Reagan is the icon of the conservative movement. To sort of use Ronald Reagan's words against Trump, but that's going to get under his skin. So where it ends up, I don't know. I mean, we had to push back on the digital taxes, on the retribution, or retaliatory tariffs and other things. I mean, Trump is not getting a lot of pushback right now. He's sort of the bully in the schoolyard, and he's getting away with it. He's got the Supreme Court under him with 6 votes, and sort of no one's pushing back. And so he's running this grand scheme of trade that he wants to run. And like I said, Canada is in the center crosshairs of that. In the end, I mean, if you listen to what Ronald Reagan said, and for those of us who were around, I was in the 80s managing money. I mean, that was the beginning of 4.5 fantastic decades of economic growth, which I would say was driven a lot by globalization. And, he is unwinding a lot of that. And, so I don't think we're not stating a mistruth in this point, but, Donald Trump doesn't take it well, and he's going to retaliate.
And is he going to calm down, do you think? Or is this a danger to Canada's bargaining chips and bargaining side?
I think it's a bit of a danger we have never really been on the inside of this. Like I say, Canada, when you look at it, Roger, to me, in the grand scheme of things, Donald Trump sort of has a view of North America, which is why he's always Canada, the 51st state, why he wants Greenland, why they want the Panama Canal back, why they sort of hard on Venezuela, and Brazil and easier on Argentina. They're sort of creating this economic zone in North America, or, in the Americas, much like China has in Asia. And, we're sort of part of that package. So, but we're not going to go and say, yeah, we'll be part of the 51st state and give him ultimately what he wants. Unfortunately, like 70% of our exports are tied to the U.S. We've been doing it for decades. So the only thing in Canada we can do slowly is start to diversify, which I think we're doing. We're exporting to other areas of the world. The goods we have, uranium. What we're doing with nuclear capabilities and engineering talents and technology, and maybe use what U.S. is doing on immigration to sort of, with the $100,000 cost of bringing in migrants to work there. We can use that to our advantage to bring talented people into Canada. So there's a game plan, but it's going to take years to put in place. So in the interim, Roger, I mean, we're going to take the hit. Our economy is taking the hit, and certainly the manufacturing core of Canada is taking the hit. And there's not much we can do about it. You can try to ameliorate the guy, but in the end, that doesn't seem to get a lot of wear.
All right, let's talk about the CPI. Your thoughts on the numbers today?
Yes,
there's a lot going on. I want to get a lot of things in here.
Let's stop talking about this. No, I mean, and really, in the end, everybody's expecting the Fed to cut again. You're getting sort of the acolytes of Fed followers on there now from, the Trump administration. They're going to push for lower rates. I mean, which is why gold's going higher. And this is a little more ammunition. I mean, it's a pretty minor move. So it's 1/10 of 1% in the core, better than expected, and 1/10 on a year-over-year basis. But it still gives them a little bit of leeway to probably do another quarter point next week. So next week, it's a huge week, Roger. We got, the biggest companies, including the big tech companies, reported in the U.S. Bank of Canada and the U.S. Fed both meet and have interest rate decisions where they probably both go a quarter point. So it's a big deal. And this just gives them a little ammunition because they haven't had a lot of economic data. Let's face it, you had the earnings, which have been pretty good, which maybe argues for not cutting rates. But, we've got an absence of economic data. Stock market doesn't care. Stock market loves everything. Good news was good news for the market. Good economic news was good news for the market. Bad economic news was good news for the market. And now no economic news is good news for the market. That scares me a lot too. But in the end, yeah, we'll start to get some hard data next week and some hard decisions from central banks. And that's going to set the path a little, but I expect interest rate cuts from both central banks next week.
All right, let's talk some earnings. Newmont came out. Stocks under pressure this morning. I haven't seen a recent number on it, but it was under pressure earlier. Your thoughts on that? What's the concerns?
Well, I think the concerns with Newmark, and you could put a little Barrick in the same glass as well. I mean, these guys were the leaders for years. The big players, 6 million an ounce or 5.5 to 6 million an ounce a year producers, but there's not much growth there. So in this environment with higher gold prices, yeah, they can put up some pretty decent numbers and they drive the costs down. But in the end, if you want to put up a long-term chart of Newmont and even throw in Barrick and then put it against 5 or 10 year basis against Agnico Eagle or somebody like that, the guys who can show some growth in production are doing better. And these guys haven't. They were the acquirer. They were, Newmont was buying everybody in sight for a number of years there. Every Canadian gold company that I knew over the last 45 years, from Hemlo to Campbell Rake Nines to, Gold Corp to Yamana, they got swallowed up by Gold Corp at some point. So they're digesting this just as Barrick did with their big acquisition. So I like the golds. I think in the gold sector, these big guys who have really no production growth and cost cutting is their only way to go is probably not the best play. And I think the market is signaling that a little bit. They have not been the outperformance this year in this very strong gold market.
Okay, and one last quick question on Ford following in GM, beaten Q3 but lowered guidance.
Yeah, I'm really a little surprised how strong the auto companies have been doing in here, Roger. I don't know what, how this is, why this is. Maybe it's, something on consumer spending driven by, it is the most discretionary spending you can do. And that's just sort of doing well for them. So they've actually, they've acted very well in this environment. And, but again, it's, they're most subject to the tariff moves.
Okay. John, we got to cut it off there, but thanks as always for joining us.
All right. Thanks, Raj. Have a good one.
You too. Have a great weekend. John Zechner, chair and founder of Zechner Associates.